What's up, everybody? Chris Dover here, founder, Pollinate Trading, head trader. I'm that guy, pollinatetrading.com. Every week I do a weekly market overview. It's an email. I write it, takes a couple of days, put it together. I send it out usually Sunday, Monday. This week I decided to do a video so I can get into the video, get into the charts, get into the positions, and just walk through it as opposed to writing it all out. So this week we're on video, we're live. So let's check the screen here. Let me share my screen. There it is. All right. If you do want to sign up for that weekly newsletter, it's free. You can do it at pollinatetrading.com/subscribe. All right, let's have a look at what we got going on here. I'm going to get into this is the six, the major pairs, the Aussie, Kiwi, Euro, Pound, Franc, Loonie, Yen, Dollar pairs kind of laid out over the last year. This about right here was the COVID-19 bottom. And I'll get into this here shortly. But I just wanted to kind of we can see a lot about what's going on in the world. If we take a look, and you kind of see everything really started to shift here in June. Obviously, COVID shifted where the dollar went fairly weak since then. And the commodity currencies, Aussie, Kiwi, really, and CAD really put in some good moves over the last year. While the pound, leaving the euro, has been a little bit more bullish for the pound. Anyway, let's get to the most important stuff. I'm going to take a look at the dollar. We got a major dollar sell situation coming up, and we're going to see that play out. I'm going to set it up with what we got going on in equities and taking a look at the NASDAQ first. Okay, so if you've been following along with the newsletter, if you haven't, again, pollinatetrading.com/subscribe. It's free, absolutely free. And what we've been doing is buying the NASDAQ when we got into the bull quiet market regime, which is just a drift higher. It just goes higher. When you get weakness, it reverses and it goes higher. Best looking sell setups in the world fail, it goes higher. Price just goes higher. And we recognize that through our histogram here below. When we're in the green, that's bull quiet. When we're in the blue, that's bull volatile. That is one factor we have to a major market top. And major market top is what I consider an 8% or greater sell-off, not a 20% bear market or anything like that. Quantitatively, 8% happens with a couple of key things happening. So what we've seen since June or so, remember when I talked about when we were looking at this, right at mid-June is when all the currency things really, a big directional change happened, right? And you can see right around here, it was sideways, 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 and then equities just started to move higher. Okay, so there is some correlation in there. There's something behind this that is that is a tailwind for equities. And if that happens to change, if something drastically changes, and you can see for the dollar, it was a slight rise. We could probably look a little over a month. We could probably see the dollar would have been right here. Boom. So the dollar kind of just started to drift down, and just recently it started to tick up. I don't think that tick up is actually the thing we're working on. I think it's going to drop and drop heavily, but we'll get to that shortly. So back in here, in essence, during the spring, late winter and spring of 2021, North America, we got into a big mean reversion pattern here on the NASDAQ. Short, long, short, long, short. Got stopped out, and right then is when it became a bull quiet market regime, because the best looking sell setups in the world failed. This was a great looking sell setup, and it failed. And we're in neutral, and it had just been working like clockwork for the last couple of months, February, March, April, into May. And in June, again, that June timeframe failed. So this right at the beginning of the second half of the year, it failed, and we just started rallying. Okay. And you can see with the histogram, we started rallying as well. So let's take that off. Well, let's hold. And so what I put a short on over here, I got stopped out. And when I got stopped out, I wasn't sure what was happening. The textbook method would have been to instantly go long. But we had another, it was a strong move, and we had a big sell setup go on, and it took off. And then when that failed, I said, okay, I'm going to let myself get pulled into this trade long. I'm going to wait for a great looking sell setup to fail, and I'm just going to let it take me from here. So waited about a week or so, had another sell setup. And what I'm getting at is I want to see these wicks up higher so that bulls took over and then they got stomped. And then bears get a little confident, because that gives you fuel, because the bears will eventually have to cover when you do that. And when that happens, that gives you a lot of firepower to go higher. So I got long here. That was the first one. Again, another sell setup came in. This was early enough so I can start to get a little more aggressive. I added, and then we came up in here, and this, that candle up above with the wick, and this came all the way down and fought back rather quickly. Bullish, I got in. And again, it's, so now I've got 3 contracts, and then we get into mid-July and it starts selling. There was some hardy selling going on. Best looking sell setup in the world. And as soon as it failed, I added. So notice I'm not buying these breakouts. I'm buying low in the breakout. I'm buying when it breaks, when I get pulled in above weakness. Okay. So now I'm 4 contracts in. I get in over here. This one was a little bit more aggressive, and it came back down. And then we spent the month of August just banging around in there. Okay. And so what that gave us was really low risk, high probability accumulation. Okay. Because we were in a neutral zone within a larger bull quiet market regime. Let me get this back up. I don't know why I closed that. There we go. So while we were here, when this started happening at the end of July and in through August, we were already in a bull quiet market regime. This is the SQN indicator. You can get it. I have it on TradingView. It's free. Just search SQN Christie Macro, and you should be Christie Macro FX or something like that. You should be able to find it. Basically, it's a 100-period moving average of the change from yesterday to today's close. So what it's going to do is it's going to measure direction, and it's going to measure how much volatility between day-to-day changes are, and that gives you a market regime. It's like knowing what if using a calendar, you can pretty much identify what the weather is generally going to be like in a certain place that time of year. Like in Montana in the United States, if I said January, you would probably think pretty darn cold, right? So it gives you context. In essence, what it does is it says you don't need to think about 10,000 things. You just need to think about the 3 things that are most important within this market regime. So that's what I use the market regimes for. So when I knew that we were still, even though it was flashing blue a little bit, it wasn't enough. Price action wasn't volatile. It was just banging around sideways. And I knew that the neutral zone, this is where the neutral zone was. Okay. And how do I get the neutral zone? In essence, it's the high of the previous month to the low of the previous month, which would have been right here, here and here. Within this range right here, you can see it. This would have been the low of July, and this would have been the high of July. Well, it's that line already. So you can see it right here to right there, this whole neutral zone. That's all neutral zone. And then the middle of that is right here. Okay, you can kind of see it you can see it really easily. I call it the neutral zone because the high and low, it's an inside candle for the previous month. If I pull up a 1 month candle, you can see July goes up. It's a big candle. And then August is just a small one that's this big sideways until eventually it breaks and it puts in a higher high on the candle. So this is all considered neutral. It's an inside bar. If you're thinking in candlestick terms, it's an inside candle. It doesn't ever go outside the previous candle. So that's all neutral. That just means nothing exciting. Okay. So with that, knowing that we were in the neutral zone, knowing that we were in bull quiet, I just waited for opportunity. I didn't know if it was going to take a month to happen or when it was going to happen. But I knew that I had low probability of an extreme event taking me out. We're in the neutral market regime, and I hadn't met, or a bull quiet market regime in a neutral zone, and I hadn't met my other requirements of a parabolic top or being above the R3 zone pivot. And so that's what kept us in there in August. And then right at the end of August, so bought one here, bought one, waited a little bit longer, got long again, finally here towards the last week of August, got long, and then we rocked out of there. So you see how it just ripped from an average. We had an average price of, it was around 14.9, I think it was 9.2, 14.92 was our price. Maybe it was even 14.82 somewhere. I forget at that time, but it rocked. And we just sat there. We didn't add, we didn't do anything because we'd already loaded enough inventory in here that it just took off. And then what was interesting is when it took off, it just stalled. So it needed to actually move much higher to turn this SQN into a volatile topping pattern to go parabolic. You see it went parabolic, and in this sense, basically, I'm just meaning if it rises aggressively above that trend line is what I would say parabolic is. It rose above it and it just stayed there and did nothing. And so what I've been hoping for is happening. We're starting to get that weakness. Okay, everybody's worried it's September and the Fed's going to stop, and whatever everybody's scared of is what you're getting here. And this is exactly what we've been hoping for in the trading lab. We've been talking about this every single day. Is we had this really aggressive move, but we want it to pull back so that we can pick up some more and get reloaded for the next move. Why do we want to get reloaded? Okay, so we're trading futures. Now, if you're trading options or futures, you have a time limit. You have an expiration of that contract. And so the entire 1, 2, 3, 4, 5, 6, 7 trades, I think it was 7 or 8 total trades that I got in this one. It was 7. They were all September expirations, which expired on Friday, this past Friday. So over here, we flipped. We sold out over here, half of them. Four of the 7 we took profits on. So we took profits on 4. We kept 3, which we rolled to December. So now our cost basis is right in here, like right here, on 3 contracts when we rolled, and then we added. So we now have 4 contracts at this area where we had 7 before. We lightened up our arsenal, and ideally we'll get up to 15 to 20 by the end of this major move, by the end of the long-term ride that we're going to get, maybe even more. I mean, we could just keep rolling this month after month, expiration after expiration, totally doable. So the new long would be above the previous day's high until filled. So I think I called it long here, here, here. We finally got long on Wednesday here. So it got long this one. I'll lower it down a little bit right there, because that was our fill, 1 tick above. And then Friday we sold off. Okay, so now everybody's talking about, oh, we sold out on the lows on Friday. Oh, woe is me, the market's so bearish and all that sort of stuff. Let me pull up the month and I'll give you what we're looking at. That's going to be hard to show. Okay, I can do it. This was last month's high. And the low 14,710. Okay. About right here. Okay. Let me just make sure this is coordinates 14710. Okay. So everything within here, this is a big zone too, by the way. It's a neutral zone. 15,689. It's almost 1,000. So it's like a 900 point, almost 1,000 point neutral zone, which is nice that we only have 4 contracts now. We don't have 9 or 8 or 10 or whatever. We lightened up over here at the top of the range, and we're in. And so let's take a look at what the neutral zone. I'm sorry, the midline of all that. Surprisingly to nobody, if you understand price action and the way things trade, the midline to last month's to August, the August high is right here. The August low is right here. Okay, so it's this range. The middle of it is about 15,150, 15,1 to 15,200 or so. Like, and we're looking at right now, we closed at 15,282. So 100 to 200 points off of the lows keeps us in the top range of the neutral zone. Keep in mind, everything within here is neutral. So if we move down to the bottom and even spike through or whatever and come back in, we're still neutral. I think this is probably higher. Yeah, somewhere, whatever, like 15.1, 15.2. We're not far off the midline. Okay. We're not far off the midline of last month's candle. So this, if every day traded is, combined is one candle, the open of the month, open of the month would have been right here. Here's the open. Here's the high. Here's the high. Here's the low. And then here's the OHLC is the close. So it closed up at the end, at the total top. Let's just see what it looks like here. On a monthly, you can probably see a little bit better here. So what we see is this candle, last month's candle, August's candle was a big candle, 622 NASDAQ points. And we're not even halfway. We haven't even pulled back halfway. And this would be, again, as you can see, right in here, 15.2 is about the midpoint between the low and the high. So we're still very comfortably trailing it. Okay. A lot of people are worried about what happened last September, If you look at it, it stayed neutral, even though, because August was such a big move, even though it came back and it sold off, it still stayed within that neutral zone. Okay. It took September, October, November. It took until November to get to the top of it. And then December just took off. Okay. So we can be in this for months. In fact, that's the way it's designed, is to be in this thing for a very long campaign, right? We're intending to be in this thing for as long as we can, because it's super easy to see what happens, right? We don't want to be in here when the selling happens. We want to be out. We want to be out, but we want to be in on all the rising. The reason we want to be out during the selling is because we're on margin. We're margin traders in these, whether we're trading options or futures. Now, if you're just owning QQQ or any of those market derivative type symbols, then you don't have to worry about expiration because it's not an issue. But it helped us in this sense. We were able to lighten our long position so that we could get repositioned on this weakness. We got one in the top range of the neutral zone. If we get down into the bottom range of that zone, you can see in last month, we barely dip below the mid range of the neutral zone. Even if we do get down in here, it's still bullish until we take those out, decide it decisively. So we have a lot of powder. If we're looking to take, 15 to 20 positions in this trade, we've got 4. So we got plenty of room. And this is a tool called using the market's money. As the market moves in our favor, you use the market's leverage to help build your position. And this is how you get really large positions at a very low risk rate that you can ride over a long period of time. Okay, so what am I expecting here? We didn't close above too far, nothing, this wasn't too far out of the way. What I would be looking for to be considered, 16,290 is the next level that we're looking at before it gets too hot again. So we've got we could spend some time here. Now, if we spend the entire month in the neutral zone, well, then the following month's projections are a lot lower, which makes it a lot easier to, hit that requirement of a major market top. If a major market top happens when we move quickly from one level to another level. This sort of movement right here had it lasted to the remainder of the month, through the remainder of the month and into the next month, we would have been in trouble. That would have been a major market top, and we would have seen some good pullback down there. But since it took off and then really just took a break, then that really gave us a lot of power. Now, with this selling, you're going to be taking the weak bull hands. The bulls who bought in over here are going to be selling. Bears are going to be getting excited and they're going to be shorting. So you need that wall of worry. You need bears to step in to short, and you need weak longs to be taking profits out. And we were part of this group too. We sold, we took profits. So I'm not pointing fingers here. We lightened our position here tactically and opportunistically because it was the contract roll. So that's what I got for NASDAQ. Still in the neutral zone in here. We're in the bullish side of the neutral zone. So if you were to look, if this was to be a candle, it would be the previous candle would be this big here. And then this candle would just be less than half the size now on a pullback, which is a totally normal. As you can see, this is a big candle. Here's a nice, tiny, small candle pullback. And then there you go. Also, these levels, previous breakout level. So this is where we broke out to new highs right here, becomes support. So we would expect the neutral zone, the midline of the neutral zone, to maintain support. And we control some people and pop down into it and do whatever, make everybody really, really scared. But we can spend the next month banging around in there without any problem. Okay. All right. Now, if you've been subscribing to the newsletter for a while, we got into Apple earlier this year. We got into Apple, I think it was back in, would have been February, early February, I think. It might have been in March. We got down in this area right here, and we've added. So if I recall, I don't have the number where we got in, but it was somewhere in this area here. Let's just ballpark the range because that was the important part, not the actual number where we got in, but the range that we got in was important. Okay, so takes off, pulls back. Again, see that pattern, takes off and backfills, comes back and tests. So, this moved out too quick, tested, found support, and that strength of the support is what kicked off this next move. Now, we had ourselves a strong move up and then this consolidation. Now, we know that there was news that came in and got angry at Apple. The market yelled at Apple. It lost App Store dominance. Something that doesn't really, that as a price trader, I don't care. I don't care about news. You can. I'm a quantitative trader who makes financial decisions based on percentages of distribution of probabilities. So if the opportunity to be long Apple at a low risk level presents itself, that's when I look to get in. Okay. That's what happened over here. So we had this big run up and then just a bunch of weakness came in. Okay. And it gave me an opportunity. I mean, why wasn't I buying over here? Right. That you asked that question. It's irrelevant because I was busy buying other stuff over here. I bought NASDAQ over here. But nothing changed over here, just that price action came down and tried to go lower and it couldn't. And so I got in and then it made another attempt on me to go lower and it couldn't hold it. And then it took off. Okay. So right now we have a nice balanced area, high-based area. So you have a breakout and you have a nice balancing act that was all-time highs. It broke out above new highs, pulled back, new highs, pulled back, new highs, pulled back, new highs again, pulled back. Okay. So what we're getting is now we've got, this is our somewhere in here, one, let's just call it 140. Oh, what a coincidence. This area right here was the area that was resistance for a while, broke out, but gave it back. So you just, even though you might think to yourself, oh my goodness, that was a breakout, we're out, you know, off to the races, and you got long only to see it come right back on you. It doesn't matter that the textbook tells you that a breakout is this, and you know, do whatever. If the breakout fails, it fails. So it took September 2020 to July 2021, almost a year, to finally break out to the new highs, and it took out that new high. And then once it broke out, it just stayed there. Made an attempt, pulled back, made another attempt, pulled back. But what do we know about these breakouts? They, even if they give them back, they go down to the bottom of a range. At the bottom of that range, which, you know, would have been, we could just call it here. Once it goes to that bottom of the range and finds support, so another value area, right? Once it goes down there and finds where the value area in essence means there are people willing to buy and sell there, and neither party, neither group is stronger than the other. So the bears are not stronger than the bulls in here. It's balanced. Okay. It's if 100 shares are bid to be bought, 100 shares are offered on the market at the same price. And slowly but surely, you know, 101 shares get bid, 100 get offered, 102 get bid, 199 get offered. So it slowly starts ticking up, and then it moves quick, and then it wants to come back. What happens oftentimes is it wants to come back and check again. So if you can see what was the midline of this balanced area became support on the next level. So one thing that we can see over here is the midline of that previous balanced area. Let's make it wider here. The midline of this balanced area, maybe a little higher here, something like this. The midline now becomes support. So what we could look at is a signal to get long somewhere within, and like just so happens that 140 big round number is part of that range. Somewhere in here, we're going to have an opportunity to get long Apple again. Likely, we're likely going to get an opportunity to get long. I'm looking for an opportunity to get long. Cool enough. We're in the neutral regime. This is in essence the market itself. You know, a lot of people trade, or, you know, Apple is a very big part of a lot of the indexes. So this is going to be an important one to keep an eye on, and one I'm definitely going to be looking to get a position on. A swing trade. So if we look at it like this, I would be buying a buyer down in here, and then a seller somewhere up later on. Whenever you know, whenever something a signal comes in, it would be a tactical options play. I'm not looking for a long-term campaign on this. This is more of a 10 to 30 day type trade. Once the bottom is established, once I get my bottom set up, I'll look to get in somewhere in there. Let's call it, like on this one, 120, whatever, 121, let's call it, was the price. And then you can see about a week, 10 to 30 days in, we peak and then comes back. And then same sort of thing. We just expect, boom, back in, boom, back in, boom. It's pretty simple strategy. It's something that I'll be covering more in the trading lab for subscribers to the lab, in addition to our end of month index strategy, our short squeeze strategy, and the other different equity strategies that we trade in addition to our futures strategy. Okay, so I'm looking to be getting long in the lower half possibly in the lower half of this, this value area here. Okay. This is valued evenly in here. This new information now, if this whole thing breaks and it, it moves down to the next value area, then we got a different story and we look for, the next, maybe this is the next value area. Notice that the bottom of this value area is the top of this one. Okay. So just keep an eye on how it moves from those places. I'm not saying that I'm going, if it hits 142 exactly, I'm going long. No, I need to wait for the, right now we got some amazing looking sell setups, right? This was a 3% down day on Apple. We had just another straight sell day on Friday. It was a quad witching day. So usually they're a little wacky. Who knows? And so I'm keeping an eye on it. Okay. Now the dollar, this is something that I've been really, okay. I get emails constantly. I get DMs, I get tweets, I get asked constantly. I don't know if I even would consider it as being asked, but pretty much I get articles shared with me and people always come out telling me like, oh, the dollar's trash and it's going to zero. And, we're the world's going to end and everything like that. And, I've pretty much ever since I don't even know when it really became, I can tell you exactly the day that I moved back to the United States and I stopped living off of, or living in countries with other currencies was exactly July 2014. As soon as the dollar became, so my whole time living overseas, the dollar was just weak. So my dollar to peso, my dollar to euro, my dollar to everything was very weak from my experience here living outside the United States until right here. So I am such an indicator. This is it right here. This whole period is when basically when I started working and living overseas, earning dollars, living in other countries. So my apartment 1 month was, when I left South America, my apartment cost me, I think it was $900 a month here. Within a year, it would have been like $450, $400 a month. Not that it was 900 wasn't cheap as well, but pretty interesting. Okay. So, I've been getting a lot of questions from people, about the dollar, when it's going to fall apart, and for the last 6-7 years, almost, I've been telling everybody nowhere, none, not an issue. That's not a thing. Well, we got ourselves a pretty decent looking, the more I looked at, this would have been COVID right here, this crazy time. We're starting to get the settings for a pretty good sell-off in the dollar. And if it does happen, we have the recipe for a very quick run on stops. And what I mean run on stop, like see how quickly this moved from trading at about $80 to 100 within less than a year. So about, was it like 8 or 9 months? It went from 80 cents, the dollar index, to $1 or 100 per dollar on the current US dollar currency index. That's a quick move. That's a very quick move. That'll change things dramatically in any country. But when it's the US dollar that puts in a move like that, things start to get very crazy for the rest of the world. And since COVID, it's pretty much been in a weak dollar, going from about 100 down to 90, fairly orderly. Okay. Found a little bit of support. Now, when this support breaks, that's going to break. That's 1-2 full stop levels, a third stop level very quickly. And that's the sort of thing you can get back into this area that, let's call it right in here, 80, 82. Very, very quickly, we can get there. And I've been, wondering how we're going to do that. One thing is this is a very good looking buy setup right here. This reversal right there that got dumped. Okay. So that starts to look like, to me, best looking buy setup in the world failed. And if we pull it up, so this is a year, this is a whole year. Last year's hammer, or last year's price pattern, this is about as ugly as you can get. So whatever rallying we've done this year, barely anything. 2020 was a big month. You can definitely see the trend there. Maybe I can probably get a DXY. I think it's, is it index? I'm looking at TVC index. There we go. So I'm of the opinion that we're going to get down into the 80 area again. And I think that this is the value area for the dollar. And it's basically based off of this price pattern. And we're still in the neutral area on the dollar. So once it gets going, it may take a few months to get going, but I think we get down to 80 rather quickly. So I'll spend some more time over the coming weeks looking at that. But one thing that's really important is if you have a weak dollar, then what does that do? That your equity markets, everybody's buying equities. You can't own cash. You have to own assets. So equities continue to push, which, that's what that means. And you can see where it all happened was right in this area, right? Let's do that. Let's go log. Looks a little bit better. So just, straight up since the 1800s and really the 1950s, post World War II is when it really happened, when the US really started to spend money on the military industrial complex is when it all happened. And that's where debt really became the thing. 1971 gold standard. Here came off the gold standard, reversal, boom, S&P's off to the races. All right. So looking at that, let me go with a weekly. Let's go with the weekly and let's do Bitstamp. So that goes. So how do we get to 100,000 on Bitcoin if the dollar stays where it's at? Well, let me compare DXY. If that's going to do it. I don't know if that's going to show us what we want. It's not going to show us how we want to see it, how I want to see it, because Bitcoin's too big of a number. Maybe I could do Bitcoin divided by 100. Maybe I can try 1,000. 1,000 do it. And then let's add, I'm gonna try this. I could be off. Percentage off. Okay. Does log look better? Okay. Where we get the major spikes on Bitcoin, these major highs, major spikes, is around this level on the dollar. So here is where, there is where the dollar spiked the first time, right? Or I'm sorry, the peak in 2017 is when the dollar really started to drop. Again, dollar started to drop. We got our peak in March 2021, April 2021. And in order, look, we're still in a major bull market for Bitcoin. So even with the sell-off, don't worry yourself. We're going higher. And this will have to get back down into the 80s for us to do that. So when the dollar drops 20% in value, Bitcoin's going to be a flood of opportunity for traders. People are going to, gold, silver, Apple, S&P 500, equities, real estate, Bitcoin, crypto, everything, especially like DeFi, everything that holds value is where money is going to flow. And the people who are going to get punished the most are the people who are saving. Now, I'm just talking about a 20% haircut on the dollar. I actually think that there's an opportunity to get a 30-40% down move on the dollar fairly quickly if it goes. So we've already seen a devaluation this past year where they, printed just trillions of dollars. And why it may not show up on the chart so much, it's showing up on Bitcoin. Definitely, Bitcoin really is one of the things that people went after to add to their savings. The value of the house that I am in, increased by about, I think it was 40% in a year, 30 or 40% in a year. When people's homes are the largest asset that they usually own, that gets kind of, that gets pretty expensive. And here we are. So I think there's more to come. I think we're going to have to, we're going to have some issues with that. And Bitcoin's going to be a beneficiary of it. I think gold and silver are probably going to get in there too. I don't think that the people haven't bought onto Bitcoin as being valuable as they did gold. And there's a certain cohort that certainly have, but there's a lot of people that still don't trust Bitcoin, and they would still rather, even if they bought Bitcoin, they're going to sell Bitcoin and buy gold or buy real estate, or they're not going to hold on to Bitcoin over time. Okay. That's their cohort. I'm not saying that I'm either or. I'm just saying that there's still a lot of people who haven't come to Bitcoin yet, or Ethereum, or DeFi. And I will definitely say that I think DeFi is going to become, let's see if we can get this one up. So let me compare BTC USD, BTC.D. Is that the right one? That's not the right one. Okay, and then let's compare alts perp. Okay, let's go to a line chart. So we can see that alts are leading. Let's go to a 1 month. Right now, DeFi in the last month has been leading as far as percent change over alts and over Bitcoin. DeFi has been the trade for a long time. Alts, DeFi, Bitcoin for the last year have underperformed. The move really happened in about October. So let's get to about right here. About right there is when the move really happened in crypto. Bitcoin has underperformed. DeFi has underperformed alts. And that's the tough part of trading alts, is that you're always chasing the flash in the pan, the one that's going to do it, right? The least profitable, you always have one it's a rug pull, it's a fake or whatever. So a lot of people have, it's a lot of degenerate gambling going into the alt space. I guess I kind of want to say people are expecting the craziest outcomes in alts and that. DeFi, on the other hand, it has the speculative part to it, but it also kicks off some interest rates. So there is something nice about it. And Bitcoin still just dominates. And the reason that Bitcoin is so important is because it can handle the most amount of money. If you were to think about, if you're in the crypto space, Bitcoin is like bonds, like treasury bonds, in that they kick off the least amount of revenue. you don't really earn very much on Bitcoin unless even when you loan it out, you don't earn very much. You earn the least amount. Alts are like the Fangmans, the high flyers. You catch the right winners and you stick with them. Ethereum has been that one. Solana up till a week or so ago was that one. And then DeFi is just kind of like, DeFi is what that deep value dividend stock portfolio would do. It just does it in a very fast manner. It just kicks off, it kicks off returns in a very quick manner, and it's a lot more stable. So what I'm looking at is I own right now, and it's because at points in time, let me go 1 year. Let's do. Been there. So from October to about let's start right there. Would have been January. So right here. Okay. So from September, might have been October. Okay. From October to the end of the year, Bitcoin was up 281% compared to 100% on DeFi and 139% on alts. So what's interesting to understand is that different times, different things happen. And 100% return is lovely in 3 months, but almost 300% return in that same period of time is what you got out of Bitcoin. And the thing about Bitcoin is when it moves, it sucks everything. It sucks the life out of everything. So traders who are always in this alt chasing game, when Bitcoin moves, the alts stop, right? You can see this separation right here. Bitcoin started to take off, and then it just rips out of there. And these guys tag along because there's always people who are investing in the alts and DeFi and everything like that. And that's fine. And they're always hoping that they're going to get Bitcoin, because let's remember, 2016, we were under 1,000 in Bitcoin. And now it's trading at 47,000. So, it wasn't too long ago that this thing was less than it is now. It also, I expect Bitcoin in this next run to get up to around 100,000, and probably before we totally peak, 150, 250, 350,000 per Bitcoin in the next few months. And then from there, it moves elsewhere. Okay. It goes back to underperforming, right? It'll go back to underperforming, and alts will be back in charge. And we want to move into alts. We'll want to be into DeFi. We'll want to get out of Bitcoin. But as you can see, there are very big periods of time where Bitcoin outperforms. And then when it stops, the alts really take off after. Okay. It's after the run. And so right now we're positioned, we've moved from alts back into Bitcoin, and we're looking for Bitcoin to take the domination. So we're going to see something like this. Okay. And then alts are going to do something like this. And DeFi is going to do something like this. Right. And then doesn't adjust. Okay. So Bitcoin's going to take over again. I don't know when it happens. It should happen up until November or so, December, and then alts and everybody else step in. Okay. All right. If you got any questions, hit them in the comments. If you're subscribed to the newsletter, hit reply to the email and ask me, hit me up. You can catch it. Again, come on. And I am at Chris D Macro on Twitter. Okay, so you can catch me, DM me, message me at Christy Macro on Twitter. Sign up for the newsletter, pollinatedtrading.com/subscribe. Hit that like and share this out to anybody you like. And let's see if we can't make some money together. All right, everybody. I love you all. Bye.